Hi, Dave Feldberg, Coastal Real Estate Group. I'm here today with Beny Rabuchin with New American Funding. My clients, they'll hear the terms private mortgage insurance and mortgage insurance, and they wonder, do I need that?
Sure. Good question. I get that asked a lot as well. So mortgage insurance and private mortgage insurance are actually one and the same. So depending on who you talk to, they'll refer to it in those different terms. Typically, if one is putting less than 20% down in purchasing a home, the lender will require mortgage insurance. The purpose of that is it protects the lender if the borrower were ever to default on their mortgage. So because they consider it as a little higher risk, because there is a lower down payment involved, mortgage insurance is then in play. Mortgage insurance is an added cost to your monthly payment above and beyond your mortgage. Once you have 20% equity, you have the ability to petition to get rid of mortgage insurance.
Okay. So I don't have a choice. If I put down less than 20%, most times I will have mortgage,
You will have mortgage
I will
insurance
have
in
to pay
some
that.
capacity, yes.
Okay. Great. That's good to know. Thank you so much, Dave Feldberg, Coastal Real Estate Group, and hope to hear from you. If you have any questions, give us a call.